We're in the middle of this huge race to define what the future of money is even going to look like. And right now, there are two major players emerging. You've got government-backed digital currencies on one side and decentralized crypto on the other. But here's the thing. As they're both speeding ahead, they're on a direct collision course with a technological storm that could honestly shatter our entire digital world. Let's get into it. You know, the source material for this whole explainer kicks off with this famous quote from Robert Frost, and it's just the perfect metaphor for where we are right now. We're standing at this fork in the road for digital finance, with two really different paths stretched out in front of us. But what if, unlike in the poem, we didn't actually have to choose just one? All right, so here's the game plan. We're going to start by mapping out these two roads for digital money. Then we'll get into this quantum storm that's on the horizon. After that, we'll take a walk down the central bank's path with CBDCs and then cruise down the crypto highway. We'll see how both can prepare for what's coming. And finally, we'll ask the big question. Are we actually heading toward a hybrid financial future? So let's dive right in and break down these two competing visions for our digital wallets that are literally being built as we speak. And this slide really gets to the heart of it. On one side, you have central bank digital currencies. We'll call them CBDCs. Think of this as the state-controlled superhighway of money, paved and regulated by one central authority. And on the other side, you've got cryptocurrencies. This is more like a huge, sprawling network of trails built and maintained by its users, with absolutely no one in charge. Okay, but here's the twist. Both of these roads, the government highway and the decentralized crypto trail, are heading straight for the exact same massive storm, the rise of quantum computing. And this isn't some far-off sci-fi thing. Experts are already calling the time we're heading towards the post-quantum era. And it is exactly what it sounds like. It's that moment in the future when quantum computers get so powerful, they can just shatter the very encryption that protects our entire digital lives. We're talking bank accounts, corporate secrets, the entire crypto world, everything. So to really get the threat here, think of today's digital security, the kind protecting your bank balance and your Bitcoin, as an incredibly complex, practically unbreakable lock. The math problems it's based on are just so ridiculously hard that even the fastest supercomputers we have today would take billions of years to crack them. But here's the scary part. A powerful quantum computer is a whole different beast. Using something called Shor's algorithm, which, by the way, was figured out way back in 1994, it could basically act as a universal master key. It could pick those unbreakable locks and do it with relative ease. I mean, that would make most of our current digital security just obsolete. Okay, so the big question is, when? When is this all going to happen? Well, right now we're still in the very early days, but the clock is ticking. Most experts are projecting that in just 10 to 20 years, we could see quantum computers powerful enough to crack today's encryption. That might sound like a long time, but in the world of infrastructure and finance, it's right around the corner. And that's exactly why the race to build quantum-resistant systems is already happening. So with that quantum threat looming, let's explore that first road, the one being paved at a rapid pace by the world's central banks. And get this, we're not talking about some niche experiment here. This is 130 countries, representing a staggering 98% of the entire global economy, all exploring their own digital currencies. This is a massive, coordinated global pivot, and it's driven by a fear of being left behind and, frankly, a desire to write the rules for the future of money. So why the big rush? Well, there are a few key drivers. For one, societies are just going cashless, and governments want to offer a modern digital version of cash that they control. They also see the explosion of private cryptocurrencies as a direct challenge to their authority over the money supply. And of course, there are goals like bringing banking to more people and, crucially, building new payment systems from the ground up that are designed from day one to be resistant to future threats, like, say, a quantum attack. Okay, let's switch gears. Now we're going to look at that other path, the decentralized crypto highway. It's a completely different vision, but it is staring down the exact same quantum problem. Now, the whole appeal of crypto comes from a totally different philosophy, right? For a lot of people, it's a way to protect their wealth from inflation. For others, it's about making fast, borderless payments without needing a bank as a middleman. And for many, it's a powerful tool for financial privacy. At its core, the ideology is about creating a system that's free from the control of any single government or corporation. Now, I love this table from the source material because it just lays it all out, side by side. You can really see the fundamental trade-offs here. CBDCs, on the one hand, are built for stability and regulatory control, issued and backed by a central bank. Cryptocurrencies, on the other hand, prioritize decentralization and privacy. But that comes with things like price volatility and, for now, a pretty Wild West regulatory environment. They are truly different animals. So you've got this massive quantum storm gathering on the horizon. How can either of these financial roads, the government's or the people's, even hope to survive? Well, the answer lies in developing some seriously advanced quantum-resistant tools. All right, so one of the coolest pieces of tech that could help save the day is something called Multi-Party Computation, or MPC. Now stay with me. Imagine you and your friends want to figure out your average salary, but nobody wants to actually say how much they make. MPC is basically the cryptographic magic that lets you do exactly that. It is a total game changer for privacy and security. So how in the world does this work? Well, it's actually pretty genius. You take a secret piece of data, let's say a private key to a crypto wallet. You split that key into a bunch of little pieces, or shares. Then you hand those shares out to a bunch of different computers, or people. The magic is that computations can be done on those shares without ever bringing them back together. So you can get the final result, but no single person ever sees the whole secret. It dramatically boosts security. Okay, and another one of these key building blocks is called Oblivious Transfer. Weird name, I know, but think of it like this. You want to buy one specific song from a huge online music store, but you don't want the store to know which song you bought. Oblivious Transfer is the protocol that makes that possible. The seller learns nothing about what you chose. It's a fundamental piece of the puzzle for any truly private digital transaction. So, after exploring these two very different roads, and this massive quantum storm they're both driving into, we're left with the most important question of all. Do we really have to choose just one? And this brings us right to the core insight of all the research. The future of money probably isn't a zero-sum game. The source material argues pretty convincingly that a world where centralized CBDCs and decentralized crypto live side by side isn't just possible, it's actually pretty likely. They could end up playing different and even complementary roles in our financial lives. Which leaves us with this final thought to chew on. Instead of one road winning out, what if our future wallet is a hybrid? I mean, could you imagine a world where you use a stable, government-backed CBDC for everyday things, like buying coffee, but you also use quantum-resistant crypto for things like private savings or sending money overseas or for DeFi? Maybe the destination isn't one road or the other, but a whole new financial landscape where we all have the freedom to travel both.